Welcome back. Looking at the screen, it's down about 0.5% or so for the frontline indices. Names like Infi, Reliance Industries, HCL Technologies, as well as DB's Labs, Cipla, and Bajaj Auto dragging their feet. Some semblance of recovery when it comes to the broader universe, albeit very marginally. You've got the small cap index, though, that's holding out by about 0.5%. But it continues to remain focused on Q3 earnings and consumption in particular with respect to volume growth, as well as what the kind of commentary is with the ongoing third wave of COVID. Let's connect then with Naveen Kulkarni, Chief Investment Officer at Axis Securities, to chat a little bit more about earnings as well as what the outlook is for the FMCG sector in particular. Good to have you on board, Naveen. Let's begin with what the expectation is in particular when it comes to the FMCG sector on account of volume growth, how you're looking at the overall space as a whole for HUL in particular.
HUL, the expectation of volume growth is in the range of around 2% for the quarter. And I believe consensus numbers are also similar in the range of around 1 to 2%. Price growth, of course, is going to be the major driver in this quarter. So we are looking at a price growth of in the range of around 7 to 8% because companies have hiked prices in the last quarter because of increase in raw material prices. So we are looking at a revenue growth of almost around 10% for HUL and looking at an EBITDA of almost around 3,300 crores, gross margin of close to around 52%, and profit number should be in the range of around, I would say that closer to around 20 to 2,300 crores. So that's the expectation for Hindustan Unilever. Primarily a pricing-led growth. Volume growth, I think, is going to be a little sluggish.
Oh yes, indeed. The increase in raw material prices is something that the street will be monitoring fairly closely. But Naveen, wanted to understand from you as well when it comes to the trend on margins, largely on account of the large raw material prices or the higher raw material prices, pardon me. How are you looking that impacting margins in the long run for the FMCG sector?
See, typically in the long run, FMCG companies, because of their strength of brands and distribution network, all these factors put together, they are able to pass on the input costs, right? So it typically happens with a lag, is what we have seen. Even in times of 2012 to 2013-14 kind of scenario where inflation used to be extremely high. Companies like Hindustan Unilever and other leading FMCG companies have managed to pass on the input costs, right? So I am pretty confident that over the long run, or not even the long run, I would say over the medium term, FMCG companies will be able to pass on. In this quarter, as I was saying, we're looking at a price growth of around 7 to 8%. So that means gross margin should come to normalize. Maybe it had lower, let's say 50 basis point lower on a YOY basis. But I think there is a decent scope that they should start normalizing from this quarter onwards, right?
Good morning. It's Nayantara. And Naveen, what we were talking about, the normalization, rising input costs. The fact is the markets already know this. They factored it in. We are hearing about how inflation is at a 4-decade high in the US, multi-decade high in the UK. So from a market standpoint, what can the expectations be? Because everybody knows the margins will be squeezed out, and therefore, how should one react to the numbers once they're out?
See, there are two factors. One is the general commentary has not been very, very encouraging. So, for example, Marico came out with its commentary. So, the commentary primarily on the demand front is not very, very encouraging. So demand, especially in the rural segment, has been quite sluggish. Nothing great happening there. Also, input costs have resulted in demand and price hikes have resulted in some bit of demand squeeze. So the primary expectation, I think, is going to be on the demand front, right? So how demand is going to pan out, especially for staples, right? So that's the key number to watch out for. So if there's a surprise in volume growth, probably if we get a 3% kind of a volume growth and expectations of things improving further, I think that FMCG companies should do well. If the demand scenario continues to remain a challenge and the FMCG companies are unable to deliver on volume growth, then I think we will continue to have sluggish numbers, right? So that's the challenge. So I think we should be overall focusing on volume growth for this quarter because margins, I think FMCG companies tend to manage over the long term. I don't think so. There's a very, very big challenge with that. But more focus should be on kind of market share gains, the volume growth, and overall sentiments in the market. I think that will be the key focus area for especially the staples companies.
The operational updates, of course, have been a mixed bag that you were talking about. Like you had Marico on one side. You also had maybe like Titan, right? That were coming out with glittering performances as far as that goes. But Naveen, a lot is also being talked about how these companies' margins also being eaten into with the new age companies, the kind of distribution policies that they may follow. How important is that from the market's perspective?
Yeah, clearly that's very, very important. So one of the things that if we look at this quarter numbers, discretionary as a space is of course very, very likely to do well, right? So discretionary, there is a huge amount of pent up demand which was there, whether it is clothing, apparels, or jewelry, right? So that I think is given, right? So that's where there is a lot of I would say that uptick which can happen. But overall, the points that we are making, right, which is essentially new distribution channel, new avenues which are coming up, and what impact that will have on the FMCG companies, I think that's a very, very important theme to look at. Having said that, I believe that there will be some bit of challenges in terms of FMCG companies, but it will also bring in a lot of efficiencies over the long term, right? So typically, I feel the kind of returns that FMCG's companies are delivering right now, those are very much, I would say, that sustainable. I don't see the returns for FMCG companies impacting significantly. I don't see a huge, huge increase in working capital, or I don't see a significant squeeze in the overall EBITDA margin. I think the companies are like fairly large in nature. The traditional channel will still continue to remain a very, very significant part of the business. So, in my sense, there might be some short-term challenges here and there, but over the long term, I feel that it will bring in more efficiencies, and these companies are very, very capable of defending their margins.
Sure. Naveen, the thing about FMCG plays in specific, or for that matter, even Asian Paints, I mean, no one's debating the long-term growth trajectory of these companies, barring the few aberrations that will always come in because of, input cost pressures. I mean, no one's not going to stop buying soaps, shampoos, have biscuits or paint their homes. It's about the valuations that these stocks are quoting at. And from that perspective, heightened market anticipations, I guess, from the earnings. At the current valuations, what is your own sense of HUL and Asian Paints and whether the good is already baked in into the stock prices?
So from let's look at HVL perspective. So HVL from let's say a long-term perspective, see the stock has not done anything. I would say that for almost a period of 3 years now, right? So post the acquisition of let's say GSK consumer business, and that's when the stock did rally and was about closer to 2000 plus levels at that point in time, and we are at 2400 levels, right? So it's like almost 3 years. So stock has not rallied much. Not that growth has not come in or profitability has been a big, big challenge for these companies. So that's not the case. So we have seen good amount of time correction which has already happened for FMCG companies, right? So most of the FMCG companies have underperformed in the last 2 years. So time correction has happened. Also, I think the important factor will be what is the next leg of growth and what kind of I would say that earnings growth these companies can deliver. So my take on let's say HUL in particular, I don't see a very large challenge with regards to valuations at this point in time. It's the growth prospects which should improve for the stock to start doing better. Otherwise, of course, it will see further time correction. But I think my focus will be on what kind of earnings growth the company can deliver. That's for HUL. Asian Paints, of course, is an expensive stock. Is much more expensive when compared to Hindustani Lever. But the great part about Asian Paints has been the kind of volume growth that the company has been registering. Even this quarter, we are looking at a 16% kind of a volume growth, right? So there's no challenge of growth with Asian Paints. The challenge with the Asian Paints has been primarily on the margin front and also on some quarters here and there where the company tends to miss the numbers. Otherwise, Asian Paints has been a performer, and you can see that even in this kind of a challenging environment where most of the FMCG companies have seen a time correction, Asian Paints has actually delivered a very good performance in the last 1.5 years, right? So from that perspective, for Asian Paints, they have to maintain growth and they have to improve the margins. Is will be the key factor, and if they show improvement in margins in this quarter and there is a surprise, Asian Paints can still do well. HVL, of course, I think there has to be a significant improvement in growth from current levels, and that's when the stock will start performing. So that's my overall picture for Asian Paints and HVL at this end.
Sure. Naveen, good to have you on the show and analyze what to expect from these numbers. I'm sure we'll chat again soon once the numbers are out. Okay, that's anticipation from HUL as well as Asian Paints, but let's move on and dissect some of the earnings which already